Hey everybody, so my name is Patrick. I'm actually the owner of Stays You Like, which is a property management company in the area for vacation rentals. And I know quite a bit when it comes to short-term rental investing. I've been doing it for around 3 years and I used to work for Avance, which is a big Airbnb company. But in general, I was really prevalent in the Joshua Tree area, and just through my own data on AirDNA and all encompassing, I want to give you guys this report that I put together, mostly AirDNA data. There's some Rocket mortgage data in terms of real estate prices. But I'm really excited just to dive in and really do this. If you guys find this valuable at all, just let me know. I'm happy to do more of these. I'm also happy to do, different sections or whatever you guys want. I'm open to feedback. This is my first time just rolling with it. But I appreciate, there's a lot of support and you guys wanted to see this. So I wanted to give it to you guys. So this is for the Q1 2023, and let's get into it. So, housing market report. I really want to go into the real estate first and seeing how the real estate has changed over the last year and even month to month. The status of the economy, the status on a more micro level, Joshua Tree area. So let's start with Joshua Tree. So market conditions, I will say it's more in general for all Joshua Tree, Morongo Valley, Yucca Valley, 29 Palms, and Landers. It's much more of a buyer's market this time. Now, what that means is that prices tend to be lower and houses stay on market longer, especially with the interest rates that are going, higher interest rates drive less people to buy houses. So naturally, prices compress a little. And so, we're starting to see a lot more lower pricing. And on top of that, homes are staying on the market a lot longer. Same time last year, Joshua Tree during COVID was a seller's market. Everyone and their mothers wanted to get in. So now it's a little bit more tampered off, and it's a little bit of that nature. Now, median price of houses sold, still, even though last year apparently prices tend to be lower, there still was an increase from last year to today, and today. So today we have 10.9% higher for prices just 1 year. And now if you look at the median sale price, it was $480,000 right now, as opposed to last year it was $47,000 lower in Joshua Tree. Days on the market went from 27 days on average before a house gets sold from the day it gets listed to selling. Now it's more so 57 days, February of this year. So that's over 100% increase. These houses are sitting. What does that mean? Potentially a good time to buy. Even at the higher interest rates, you can always get a lower interest rate and get that refi in. Now, year over year inventory growth, right? So number of homes for sale have pretty much 153 last year to 175 now, meaning there's around 15% jump. There's still there's more houses on the market, but at the same time, it's more or less the same. It's just taking longer for the houses to sell. Now, per bedroom, all through and through, we saw an increase of the sold price specifically for 5+ bedrooms. Let's look at 4 bedrooms and 5 bedrooms. 4 bedrooms a little less, but 5+ bedrooms went up from $604,000 on average to $1.6 million on average, which is a crazy jump in price. Where do we also see pretty significant jumps? 16% for the 2 bedrooms and then the 12% for the 3 bedrooms. So there's a lot of demand from people wanting to get in to houses that are 2-3 bedroom houses. Now, number of houses sold 30% more, but like more or less from last month to this month, we're seeing a little bit more of an increase going into the spring market, where from what I've seen, a lot of realtors are saying it's going to be a lot more active as, you know, people start buying a lot more in the spring. Now let's go into Yucca Valley. Yucca Valley, the medium house went up for 6%. Now, $22,500 difference, and, you know, medium selling price is $395. Once again, we see almost double in terms of the sale time from last year to this year. So 38 days to 73 days, which is pretty significant. Number of houses, pretty similar to Joshua Tree. You know, you're getting around, you know, a dozen more. You know, maybe like, math is horrible for me. 19 more. So, you know, from last month to this month, so you're starting to see that trend upwards. Now medium sold price per number of bedrooms. This time 5+ bedrooms are only 14%, but you still see in Yucca Valley, you see a 40% increase in the amount of bedrooms that are sold in terms of listings, 5 to 7. I think I messed up here because it was supposed to be the amount of the sold price, you know, like how many are being sold. But nevertheless, this is the inventory. So my apologies on that. Let's see this. Month over month, from last month to this month, quite a jump in Yucca Valley. A lot more houses are being sold in Yucca Valley for some reason. Maybe people are disposing. I don't know, but there's a big trend happening here. Now let's go to Landers. Landers has 315,000, and now you're getting actually almost 4.5% less in Landers. So Landers is actually going down in price of house sold from last year to this year, meaning it's losing value. So Joshua Tree, Yucca Valley holding value, Landers losing value slightly, 4.4%. Now, days in the market, yet again, almost double. This is a trend for most of the surrounding markets, 26 days to 45 days. Now, if we see here, you're going to have a lower month to month in terms of 43 to 47% less, which means that number of houses that are being sold in Landers is going downwards. Now, this is, once again, it's supposed to be the medium sold price, but let's just go into inventory. This is just inventory numbers. More or less, I mean, you're really getting a lot less inventory being sold this month versus last month. Now, month over month, last month 9, this month 6, 33% decrease in houses sold. Now let's go into Morongo Valley. Morongo Valley has a 3% increase in price for houses. That's good. It's also $10,000 more. The average is $355. It's a lot lower than like Joshua Tree, for instance. Now what you're seeing here is, once again, almost double for average sale time, days on market. Now here you're seeing last month to this month, you're seeing 3.8% increase. And this is correct. So the sold price here is showing for Morongo Valley 100% increase on 5+ bedrooms. 100% increase. Now you're seeing a trend here. I mean, 4 bedrooms went down pretty low, but 5+ bedrooms tends to be, in most cases, from last year to this year, increasing in value tremendously. Now, you're also seeing 1 bedrooms increase in value as well. The number from last month to this month shows a trend of 50% less houses sold. I mean, overall, there's not many houses in Morongo Valley, so this makes sense. Now let's go 29 Palms. Let me drink some water. Yeah. 29 Palms, we're seeing 13.7% increase in home values. That means there's a lot of demand for this area. People are buying. That's $295,500 is the medium sold price. A lot more accessible for a lot of people. I would assume that's why people go there. But will the numbers pan out when it comes to the investing side for short-term rentals? We'll go into that a little bit later. So now, less than the other markets, but overall, the sale time has dropped, has increased, but not as much as other markets. Last year this year, last month to now, there's a lot more houses being sold in 29 Palms. Now, this is the amount of listings, so also wrong. I might have to get you guys some more data on this, but overall, you can see that the listings from last month to this month have increased significantly per bedroom. And month over month, more or less the same. Now, that's all good and good. How much certain properties cost, the overall value of the houses, that's great. But I want to know, as an investor, where should I look? What is the market saying about Joshua Tree? This is going to pretty much break down from AirDNA numbers, the best source for data information on short-term rentals. It's not totally accurate, obviously, and it's the law of averages. However, more or less, this is a good indicator of how the Joshua Tree market is acting currently. I'm currently being invested in Joshua Tree, and I'm going to go over this chart right here to explain why. Now, with overall market grade, what this is just overall taking all the different things all the 5 different criteria we have here, and basically setting more or less how demandable the market is. Now, 75 out of 100 is actually really good. Most cases, even 80, like 90 is insane. You don't see that very often. But the fact that it's at 75 is a good thing. The rental demand in the area, this basically indicates how much do people really like, is there traffic drivers there? When I say traffic drivers, I mean, what's the reason people are pulling in this area? So for us, that's the Joshua Tree National Park, all encompassing, but it could be festivals. It could be all these different things that are going on in the desert, people getting away from the big cities, the Los Angeles and the San Diegos of the world, people flying in now, maybe potentially. So this is like, why are people going to Joshua Tree? What's the appeal of the desert? And it's pretty high. I mean, the numbers show really, really high. Now, where we're seeing a little bit of a lot lower is the revenue growth. That just means pretty much now, is there potential for revenue growth down the line? It's saying that there's not at all because of what happened in the last 2 years where all these people were coming in. So saying that revenue growth isn't going to be as high. Now, I have my reservations about this specifically, but overall, it's just good to know that data shows that things have been slowing down in terms of revenue growth. So it's not growing as fast. However, that might change. So now let's look at seasonality. Joshua Tree, amazing seasonality. I mean, think about it. It's the best of all worlds. Like, people come in the spring is the best time. Winter is really great market. Now fall is okay. And then summer tends to be slower, right? But the thing is, with Joshua Tree, people are off in the summer, right? So they have more time to travel with their kids. And Joshua Tree, with all the pools and everything that's happening with the standards of, all these short-term rentals, it's actually a good thing for the market because people can rely on making sure that there's a pool and there's all these other amenities that will make the stay a lot more pleasurable. And I think that seasonality shows that there really isn't much seasonality in Joshua Tree. It's not like, Midwest where you have the summer and then you have nothing else throughout the whole year. This is pretty good. Regulations, obviously, regulations more or less have taken over a little bit overall. It's a little lower, but it's manageable. It's not like the rest of California. It's still manageable. It's a lot of pro. Pretty much, some people are against it, and you hear a lot of negativity. But I believe that there's still a lot of pro vacation rentals, and pretty much a lot of communities and things like that. I really do think that regulation just helps. It just regulates, it's a lot more stable versus no regulation, and things can just change overnight, right? So there's some sense of feeling that this is a good way to go. And the last one's investability, and what that means is just how investable is this area? Like, are these price points low enough or investable enough where you can make money, and it shows really high. Now, investability is with the prices of the homes, as we saw in the previous slides. That's a good thing for the area in general. Now, let's go into all these data points. I mean, there's quite a lot here to digest. And I'll have these slides. I'll have a link to the slides so you guys can just pretty much download these slides and really take a look at it more in depth. But what I'm going to do is I'm just going to go through and just show you the amount of listings for each specific area. So active rentals in Joshua Tree, 1,231, Yucca Valley, 1,050. Landers, Morongo Valley are a lot less. I mean, you have 153 in Landers and 83 in Morongo Valley. So it's a lot less. That's how many active rentals, Airbnbs. So there's potential to get properties up and running in those areas and turn them into active Airbnbs. There might be a thing for it, and we'll talk about that a little bit later. Now, 29 Palms is 685. So a little bit less, but more than Landers and Morongo Valley. Now, what kind of average revenue can we expect from all these markets, right? So Joshua Tree, Yucca Valley are a lot higher, and then you have 29 Palms and Landers are kind of up and up, and then Morongo Valley is the lowest. Now, we're going to break that down per bedroom, which is going to be a lot different as well. So get ready for that. Average amount of bedrooms for all markets, around 2. Average amount of guests, you're going to get around, on the higher end, Yucca Valley gets more, probably because there's a lot more 5-bedroom, 4 bedrooms in Yucca Valley from what I've seen. Now, you also get 4.9 for average amount of guests from Morongo Valley. As you saw, there was a big increase of studios and 1-bedrooms, so I think that's part of the reason. And that's probably also part of the reason why the average revenue is lower as well. Now, the standards are really high in this market. I mean, you have to come in here. You have to differentiate. There's a lot of really great hosts in this area. You guys are amazing. So, 4.87 is the average for Joshua Tree, Yucca Valley. Landers 4.89, and it's just the standards are high across the board. I mean, percentage of listings with 4.5 plus stars is 95%. You don't even get to see if you have less than 4.5 stars. You can't compete. This is crazy. I mean, the standards are so high. Now, full-time listings. This is interesting. What percentage of listings are 180 plus days, meaning that they're full-time short-term rentals as opposed to just somebody renting it out here and there? Now, that's 60% for Joshua Tree, 55% for Yucca Valley. That's like more or less throughout all of them, around 50%, 60%. So that's also something to consider. Now, let's do a market comparison by booking trends. So the metrics, occupancy rate overall is going to be more or less the same across the board. It's going to be around 50%. Now, the booking lead times, that's going to be around a month right now. That's what we're seeing. A little bit more for Morongo Valley and 29 Palm. Well, Morongo Valley, Landers has less, but Morongo Valley has the most at 37. Landers has 28. And what's the average stay look like? Joshua Tree is only 2 days. So there's a lot of one-night stays in Joshua Tree, right? Now you're getting 3 across the board for the rest of the markets. However, Joshua Tree has 2. So probably because people are going to the park and maybe they just want a one night stay, and Joshua Tree is the quick and easy way to do that. So you're going to get more one night stays. I'm not quite sure. Now let's go into the average revenue per percentile. Now there's specific percentiles of the market, right? So 25 percentile is you're on the 25% of the lowest listings in the market. Now 50th percentile means you're in the 50% of the market pretty much. The 75 percentile means you're the 75th. The top, almost like you're basically the 75th. I don't know how to explain it. It's like 75th is like let's say across the board, this is how much people make, and then you're making 75% more than everybody else. I think that's a good way of putting it. 90th percentile means you're making 90% more than everybody else. So now what we're gonna see is this actually is very interesting. So listen closely to this. Now you're getting the significant jump across all of them except for Morongo Valley maybe, and a little bit of 29 Palms is significant between the 75 percentile to 90 percentile, meaning that being in the top 10% has a lot of value, meaning you have to be the best of the best. There's a lot of competition, so you're going to have to stand out. And you get rewarded a lot for standing out. I mean, even in Yucca Valley specifically, going from, being in the 50 percentile, let's just look over here in the 50 percentile. Oh man, that's bad. But 3,900 and then 9,600 to get into the 90th percentile. Now that's even more than Joshua Tree right here. And the lowest, even if you're performing at the highest of everything in terms of 29 Palms, you're still not going to get anywhere close to any of these others at the top. 6,300. That's not a good sign, right? So what does that say? That says if you're the top performing in Yucca Valley, you're going to be making a lot more than if you're top performing in 29 Palms. So no matter how hard you try, if you have a 29 Palms property, you're already limited somewhat. And that might be, because of bedroom counts or other things, but overall. Now, let's take a look at here the market comparison year over year. So from last year to this year, what has happened to the market revenue growth? So the revenue growth for each market has been lower. As you can see, 15% lower, 19%, 17%, 19%, because of COVID. There's a lot of money being made during COVID. So all of a sudden we're getting this whole rundown because all this supply came into the market and now you're competing against a lot more people. So I do think that it's stabilizing. It's going back to normal rates. And I do think that there's still a good opportunity to buy because now is a great time when things are low. And now I do think that there's a projection for higher. Now, the one that also went up in revenue was, in fact, Morongo Valley. Now, Morongo Valley has that benefit, which is great. But also, their occupancy went down, meaning that they had less people staying in their place, just like everybody else, right? More or less. But what went up is their average daily rate. So the quality of listings in Morongo Valley have gone up in terms of how much money they're making per night. Now, let's go into revenue per bedroom. Now, listen closely to all these different markets. This is what you have to buy in terms of revenue or in terms of bedrooms. You have to focus on bedrooms because it's important. Now, and you're going to see this trend. There's an inverse relationship that happens that the more and more or less, the more bedrooms that you have, the more money you make, right? Now, the less listings there are active for those specific parameters. So like 2 bedrooms, there's 450. 3 bedrooms, there's 356 in Joshua Tree. And those do okay, but look at the marginal difference here. You're going from 4,300 to 4,400. Now the jump between a 3-bedroom and a 4-bedroom is 4,400 to 7,100. Now the jump to a 5+ bedroom is significant. 10,100 on average for a 5+ bedroom. Now, what does that say? More bedrooms, specifically 4+, the better. But there's less listings, so less competition. Now, same thing goes for Yucca Valley, more or less. As you could see, the more bedrooms, right, the more money you can make overall. However, here in Yucca Valley, 5+ bedrooms get the most per money, and there's only 56 of them out there, as opposed to 129, and getting more or less the same, actually less on average, from a 3 to 4 bedroom. So it's good to know. Now, landers. 5+ bedrooms. There's really not many in landers. I think it was like 2 here or something. It was like 2. But the 2 or 3 that are active are making 12,400. I mean, so much more. And the 7 that we have here are making 6,900. I mean, overall, the trend is more or less the same. Now, Morongo Valley doesn't have enough data there's not enough listings, 1724 for enough data. There's only 1 and 2 bedrooms, but even then, I just didn't think it was worth showing. But Morongo Valley is an up-and-coming area. Hopefully we'll see some more information later. And here, let's go see the same thing happens. 76, this is 29 Palms. To 5 bedrooms gets 7,700. A lot less than Joshua Tree Yucca Valley for a 5-bedroom, but they also probably cost a lot less. So, I mean, it's a trade-off. But even being in the top percentile for them, I mean, the average is not the highest. So, I mean, maybe it's more worth it going into an area like Yucca Valley. Now, which investments to make? This is the last slide I'm going to share and the takeaways from this whole presentation. Now, I consult a lot of my clients on the property management side of things, and I basically know exactly, like more or less, not exactly, but more or less what amenities to add or what things to look for if they're looking to buy their 2nd or 3rd house, because a lot of times our clients stick with us and we pretty much onboard other homes with them because they know that we more or less are going to look at the data and we're going to pick a good place for them to buy. Now, go consult a realtor for that. If you wanted to buy it in the market, I definitely recommend Joshua Tree right now. I do think a lot of people are sleeping on it. Yes, there was this huge trend that happened just recently, but I do think that overall people are not totally realizing that that Joshua Tree is still untapped, considering how much the neighbor Palm Springs has in terms of property values being in the millions, right? So I do think that there's still untapped potential. The level of Airbnbs went up in the area. I do think people are traveling more. It's the 8th most visited national park still, and it was the 10th during COVID. So that shows that even after COVID, it's still holding really strong, over 3 million visitors. I do think that because the level of competition went up, the quality also goes up. And when the quality goes up, people make more trips to places where the quality goes up. So more people incorporating pools, more people incorporating all these different amenities. You know that you can find a place, So I always think that's a good thing. Now, criteria to look for. Not every property is the same. Not every property is great. And we tell this to our clients. This is what we say. This is the secret sauce. And now everyone's going to go for the same properties. Whatever. If it makes the place a better place, I don't care. I'm going to give you guys the rundown. This is what it is. Now, properties with big lots or remote feel to the land. What I mean by that is it has to be pretty remote, like 2.5 acres, 5 acre lots. Those are great. And so those are going to give you that remote feel that people are looking for when they leave to get to the desert. It's part of the experience, right? And newer build properties also do a lot better, is what I've seen. Is the newer the build, the higher end, it attracts a specific demographic of people that are willing to pay the money for it. So that's always great. Properties with views of the mountains. I mean, look at this picture right here. Look at these mountains. Actually, I'm going to make it red so you guys can really see it. Right here, right? Look at those mountains. I mean, people look for those views. People love that. I mean, it's part of the appeal of these beautiful mountains that we have. So why don't we just take advantage of that? And a property nestled in natural boulders. As you can see here, boulder. This is a natural landscape. You're integrating the property within the natural landscape, and it's something that a lot of people don't get to experience. So it's a really high, people really enjoy coming to Joshua Tree for that experience and willing to pay the money for it. Now, 4+ bedrooms on permit. Now, why I say that is because 4+ bedrooms, as we saw in the data, there's less listings out there, but they're also produce way more money on average. So I think it's a big trend, and I think a lot of people should be paying attention to that at 5-6 bedrooms. Now, depending on the area you're at, you're going to be capped, and there's going to be rules and regulations that change so much in terms of guest count. But overall, in San Bernardino County, 4 bedrooms is 10 at the time of this recording. So 5 bedrooms is 12, and 12 is the cap right now. So 12 people, if you could sleep 12 people, and there's a lot of people that are in the 3-bedroom, 2-bedroom category that can only sleep 6 to 8, 4 to 8, that's saturated area, right? But when you can sleep 10, 12, now you're getting to compete with the other dogs, and you start getting more revenue because there's less listings like that. I feel like everyone's going to start buying 4 or 5 bedrooms, and so be it. I think I want you guys to succeed. I definitely, that's why I'm doing this. I really want other people to succeed. I want other people to make the desert a better place. And 4+ bedrooms are great. And honestly, I don't think it's a big issue with parties. I think LA has more parties than Joshua Tree. LA, San Diego, all these city markets, you get parties every weekend. Joshua Tree, you get 1 or 2 bad apples during COVID, maybe here and there. But overall, people don't really party as much here. And if they do, and if they get loud because sound travels really far in the desert, Noise Aware, Minute, all these different platforms or devices to help notify before a party or loud noise happens. Now, a property with an in-ground pool, that's super important because of seasonality. People check the mark, especially what's happening in Palm Springs. That's happening kind of in Joshua Tree right now. People want to make sure they have a pool, because pools cool down people, especially during the summer. Now, unique architecture or design. As you can see right here, we have ourselves a dome. Now, this dome is a unique structure. It's an architectural structure that people want to experience. Glamping units, these domes, all these cool architecture. Even up here is pretty cool. I think that's what people are looking for, the unique stays. Airbnb is specifically pushing on their algorithm, and I highly recommend you guys jump on any opportunity like that. Now, this is a photo of me, and it's a great. I mean, that's like the only professional photo I have, and it has pineapples on it. But if you want to contact me at any given point, feel free. It's Patrick, Patryk, at staysyouLike.com. I am happy to answer any questions about the market, about how much money your property is going to make if you buy it in that market. I can give you data on what the rental is going to be, compound on how much money it's going to make, depending on, if you're self-managing, property manager, all that kind of stuff. I'm willing to help. That's why I'm here. Facebook as well. Patrick Switek. Feel free to add me. Feel free to follow me. I post a lot of content on short-term rentals, Airbnbs, and also my website, staysyouLike.com. Feel free to browse a few of the listings that we have if you want to ever stay in one of our listings, whatever the reason is, or if you wanted to inquire about property management. I'm happy to take a look. We don't accept everybody, but I'd be happy to see what you have and see if we can work together to really maximize your revenue. But overall, I'm just here to help. So whatever you guys need, please let me know. Please let me know if you like this, feedback, all that kind of stuff. I know there's a couple mistakes here and there, but I hope this is valuable. So if it is, I'm going to keep doing it. And I think, I think Joshua Tree overall is a great market to invest in, Joshua Tree area. And I would just know where to go and what to pick and consult the local expert, which is a realtor. So highly recommend that. Anyways, take care, guys.